Oh, I'm not showing my right screen. Okay. Welcome, everyone. Sorry, I'm not showing my screen here. Let me bring this up. Forgot which screen I was broadcasting. Let's see now. Oh boy. That's not what I wanted. Okay. Alrighty. I think we're all set here. Sorry, I have to set up multiple broadcasts now. It's a little bit different than it was before. Um, but once again, welcome everyone. Today is August 11th. Welcome back to my trading vlog on YouTube, on the YouTube channel. But we're also on Facebook as well. So that's what got me a little bit started a little bit slow this evening. Hope everyone is staying safe and happy and healthy still amidst this coronavirus pandemic. Today we're talking about the big move we had on the Dow today. This is my big win. I had this up and I got stopped out for profit. It hit my trailing stop here, and I kind of suspected it coming. A couple of weeks ago, I put this label up right on my Dow chart. Um, the Tweezer plus John Wick, and this was just a reminder for me to apply this principle and this strategy to this particular to this particular security, right? This particular kind index, right, on the Dow. And today I get to finally explain how this worked quite beautifully. I didn't catch the maximum amount of the move, to be perfectly honest with you. I did miss a lot of trades today as well. I was up well over $700, but I mean, I let a lot of the profit slip through my fingers, and I don't know I don't know what I'm supposed to do about that, other than I just have to, I guess, not be greedy about stuff, I guess. But okay, hold on a sec. I have so much to pay attention to now. Now that I'm on Facebook and um, I'm on. Hold on a minute. Okay. I feel like I'm not live on Facebook right now, but oh well, whatever. Right? Facebook will have to wait, and I'm not gonna waste time having to deal with that. Okay, so what am I carrying over? Not much. You can see on the side here, I have a nat gas position open. This right here is the zone you see marked off right here is the opening range, the 9 o'clock candle opening range. I didn't. I took the nat gas first. I was a little bit late because I was working on other stuff this morning and I was kind of in the zone. I lost track of time, and I didn't get to look at the market until like 9:05, like kind of on the dot. So I was a little bit scrambling. I feel like I'm always missing the market for whatever reason. But this didn't move. This was a very choppy move. I took it, but I didn't even get, my, is this even a 1-to-1? I don't think I even took a profit here. I guess I should have and I could have, but like it wasn't a strong risk reward ratio here, and I think I got stopped out either for a loss or a break even. I can't remember. It doesn't really matter. It was only 3 ticks. It wasn't too big of a deal anyway. I kept my break down, and I'm in that position, but I don't know how this is going to pan out, to be perfectly honest with you. So the breakout on the nat gas today, kind of boring. Not really anything to brag about or write home about. Kind of boring. The crude oil is the one that I wanted. Look at this. I missed it again. I missed it yesterday and I missed it today. But here was my thinking, right? So on the crude oil, the opening range is marked off by the orange zone here. 12-point range, a little bit, a tiny bit outside of my comfort zone, like just a tiny bit. For me, the ideally the max is 10 points. But 12 is workable. I'll work with it, or I'll take a 10-point risk here, and it'll be a little bit. It won't be quite as much of the full zone, the full opening 5-minute range. I didn't want it. I definitely didn't want it. So okay, pretend like you only see this, right? Let me make the chart a little bit bigger. Right, so pretend you only see this. So you only see the opening range, which is like, this big thing right here. I definitely you would think that I would want to take it long, right? Because it looks like it's an uptrend. But if you go to a higher time frame, you'll notice that we're running into some problems. Like this, the origin of this uptrend started all the way down here, and we're all the way up here now, and running into some traffic. Some defense, right? This area where price is being spanked down multiple times is an area I don't want to be in necessarily, right? So I'm not entirely convinced that we're going to be able to break through this. So what I did was, instead of taking the opening range, I intentionally took a shot up here, right, at 43, 43.25, which is the big green number off the big quarter, right? That's the it's the big boundary off the big quarter, which is the 250, right? 42.50, or I should say technically it's the 500. 500 is the big quarter, right? And this three small quarters above that, 75 points or 75 ticks above that is where. Can't really call it a tick, but 3 small quarters above that is really where the border is, and you see that it respects that quite well, right? I thought we were going to run into some traffic, so I had a set limit to sell up here, but it never made it up there. I thought the trend was going to continue because look at how the RSI is above 60. So I was like, all right, push it up a little bit, and then I'm going to take the short up here at 43.25. I was wrong. I should have just taken the... I knew I didn't want the breakout long. But I also only had, at the time, I was really heavy into like other positions, and I only had enough margin, and I was already in the nat gas, and I didn't have enough margin to set it up here and take a breakout trade. So I just went for what the safer approach was, which was up here. But turns out I was wrong about that, and the breakout is where the move was. And this is like a $500 move. 1, 2, 3, 4 quarters at the very least. And if I held it to the end of it, that's a $500 move right there that I completely missed out on, right? So that could have been another $500, right? So the crude oil is like, it's like a love-hate relationship with it. I got to be honest, because I see it, I have the read on it, like I have my finger on the pulse of it, but I'm not executing on it. It sucks. And instead I'm doing stupid stuff on the natural gas, which doesn't move nearly as much. And I don't know what's going to happen with this. I'm not really this is the only position I have open, as you can see, right, from the red dot there. Red indicating that I'm short, but I don't. I mean, I could take this early, but I really don't care. I'm gonna give it a shot, because hopefully hopefully, it'll break down below these lows and hit my target. I don't know. I'm being very, very greedy about it, but whatever. Like it's not something that um I really want to mess with, right? So in my head though, like I was kind of scared to take this below, because like there's all this, like, I mean, because I'm taking a short at the RSI being above 60, right? So that to me is a little bit, makes me a little bit nervous. But a breakout's a breakout. You call it a breakout for a reason, because there's no, like, you're not taking a like a pullback, right? I did try to take a pullback. I did put an order right here, right at the 42,625, and I didn't get picked up. All right, so close, one tick, so close, didn't get picked up. The other thing that really annoyed me was this corn trade, because I was in the corn. You see where I marked off the lines. I was in short. I was in for a short position at the 325 and 6/8. That's what that is, 6/8. So 325.75 if you want to think of it that way. And then on the market open, it goes all the way to my stop, to the tick. Exactly, if you look at this number right here, the high, it goes exactly to 327.4. You couldn't give me like a little bit of a break? God, so annoying. Because sometimes you'll hit the line exactly and you won't get filled, and sometimes you like when it's a stop, when I'm trying to get in a trade and it like just kisses the price, like there's not enough orders for me to sell from, or there's not enough volume for me to get in at that price. Somebody else gets in at that price, because it's like first come first serve. But for me, like when I get stopped out, on a stop, of course it gets filled immediately. Sucks, right? But I mean, this is a short that ended up working, right? Or it's still working, right? And I didn't once I got stopped out, I didn't know, right? Because I turned my notifications for position alerts and stuff. I turned that off because it controls my attention way too much throughout the day and stresses me out. So I turned it off, and when I came back, like an hour or two later, I want to get into more of the habit of taking like visiting my trades and taking a look at them like every hour or every other hour or every couple of hours, right at the top of the hour. So like when a new candle is forming, right? Because I usually keep an eye on it on the hourly. I usually look at this. And if I need more detail, I'll zoom into the 15 or the 5. That's kind of rare. That's just more out of curiosity. But I actively work with the hourly and maybe the 4 hourly, which looks more like that, right? So for me, like the 9 o'clock opening range, it skyrocketed all the way to my stop. It just touched my stop, got me out of it for like a $75 loss or so, and then it went in my favor. It's just like, killing me. Which is why today, even though I made $490, a little bit more, like just under $500, I'm not very happy. I know I should be grateful. I know the like $400 is something, right? I should be grateful, and I guess to a certain extent I am. But there are like little things like this where it's like, again, I'm always like I'm obsessed with more with the process and less with the money and the price, right? And like how much money I'm putting in my pocket, because I know as long as I'm managing risk in an appropriate fashion, I shouldn't have, and like unless I'm getting loss after loss after loss, and unless I'm getting like 10 losses in a row, like my account isn't going to shrink all of a sudden like too badly. So for me, it's just like getting a lot of reps in and dealing with like getting triggered on a trade, managing the trade, and missing a trade, managing margin. Like this process is really what I'm focused on. And today a lot of stuff happened that I was not happy about, right? It's like this corn thing. So the stuff that I was happy about, what led to the actual $490 in profit, was the Dow. right? Because on the Dow, let's see, I'm just gonna zoom in a little bit here. Okay, on the Dow, you can see that I spent a lot of time here on the Dow, like taking profits, scaling in, taking profits, scaling in, right? Now that I know how TradeStation likes to calculate their cost basis, right? And calculate, like, what positions you're in, what positions you're out of, right? So, like even starting from yesterday, I was holding a position long, probably right up here, right? I think it was right here. Yeah. So you can see this blue arrow. I'm in one contract, and I must have already been in from down here, right? So I think I bought here, and I sold here to lock in 250 points, right? From red to red is 250 points, right? Big quarter, right? Which is 25 times 10. That's what big quarters are. So I have my a 250 point move here, but you can see I also stacked in another contract, and I was holding that until all the way up here, but I also stacked 2 more, right? I thought I was going to be able to push it up even higher, but it stalled out. You can see here that it completely stalled out. So let's talk about this whole tweezer John Wick business, right? So on the 15-minute, like, I just saw so much evidence, so much evidence of tweezers and John Wick. So this is on the 15-minute, right? So it's not the most accurate kind of time frame where you're going to get the highest quality information. The higher the time frame, the higher quality information you're going to get. But this right here, this little this almost a doji looking candle here with a I guess you can call this a engulfing, kind of, not really, because it doesn't go that high. No, it doesn't actually go higher above the high of this doji candle at all, but you can see this formation here indicates it's like a warning sign. It doesn't indicate guaranteed that the price is going to turn around, but it shows that it's considering it, right? It wants to, and so I'm like, oh, I don't know. I immediately started to kind of regret this, like, stacking it. You can see this blue arrow indicates that I stacked another contract at the 28,000 even, right? Usually 1,000 even is the strongest price, the strongest kind of magnet that's going to keep the floor up, but it's also the strongest in the other way as well, right? So like there's like something's gonna, it's like an invitation for something to happen. So very, very, very mindful of possible reversals in this, big quarter range, right? This boundary right here, this like zone, right? This is a 150 point area, and you can see that it stayed inside of it for a long time. This is where the tug of war really starts. Is what you're seeing here. All these wicks, right? You see wicks on the top side. You see wicks on the bottom side, right? And so it's like it's gonna break, right? Because price is at war here. When there's less movement like this, and it's just a lot of wick just going back and forth, it means price is at war. You see a tweezer here. You see a tweezer down here. Right, and another one, kinda, if you want to be a little bit loose with the definition, over here. And if I go up to the higher time frame, you see another one here. Like, do these bottom tweezers, does this mean it's gonna break up again? So what I ended up doing to deal with this is I pulled the entry or the buy at the 28,000 almost immediately. I almost pulled it right away, like within an hour, right? Because I was like, I don't think it doesn't look like it wants to hit this, right? But I did put a target there just in case, right? So I sold here, and I had some sells up there, but I had the most sells. In other words, I had even more sells than I had buys, right? I had more contracts sold than I was long in down here, right, above the 27,925, because I know that if it breaks down there after a tug of war like this, it's going to clean house, right? And that's what this whole thing is to remind me of. Like all these like they're tweezers, and we saw a lot of tweezer action on both the above the candle, on top of the candle, and on the bottom of the candle. But so I had like sell stop orders here in addition to my stop loss for a profit, so technically a trailing stop, and you can see that it just fell off a cliff. And I took so I won a couple of $100 going up, and I won a couple of $100 going down. I did move my stop up to this point right here, and so we might see a I don't know what we're gonna see, to be quite honest with you, because this move started from RSI above 60. Oh, you can also see divergence here. There's also divergence here. Right? So many indications, right? The candle formation, the divergence, the price itself, quarter, such huge confluence that this area is an important area, right? And I guess I mean I could have, you know, it's tough, you know, it's coulda, woulda, shoulda kind of situation, right? I could have just bet more heavily in retrospect to take the short immediately at the 28,000. Or just take profit, but I had a lot of contracts still going, so I didn't make nearly as much as I could have. But I am happy with my process of being able to capture the movement long and capture the trend break short as well. So not as much money as I would have liked to have made today, even though, you know, 490 isn't anything to complain about. I'm okay with it. I wish it was I wish I had that 500 in front of the number, so that I can say that I like 500 to 550 is where my weekly target is, and so I can almost say like, oh, in one day I'm done for the week, so to speak. Although I do have last week to make up for, because I was basically break even last week. So I did make a lot of money, but you know, it was far from, like, in terms of trading quality, I would not give myself an A. I would give myself like a B, maybe B plus, maybe. I don't know if I want to give myself, if I'm being generous, because there were a lot of places that I shouldn't have taken the losses that I did, like the crude oil. There's like, why did I not take the breakdown? I got scared, really, and I wanted to be safer, and I was wrong. Not the end of the world. The corn, you know, it's not really my fault, I guess. This could just be bad luck, if you want, but like, you can, I mean, I don't know. Like I said that my risk would always be around $100, and in this case the risk was closer to 75, and I was like, that's fine. Right? Because it was someone else's pick, right? It wasn't my pick. And I just wanted to be consistent with it, even though what I actually promised to be consistent with is, you know, $100 risk per trade. And I also took something on the soybean, which I actually ended up winning some money on. But I also lost a little bit of money as well, because I tried to stack a contract, and you can see these two arrows show that the position went against me. So not the best trading day overall. It's just that I had this one really baller move on the Dow that really made up for everything. So pretty good day. Not the best. I would call it a solid B to B plus kind of day. But it's the best day that I've had so far. So you know, it's just one of, like, how are you going to measure that out, right? But you know, there's still so much room to improve for myself, so I'm not going to get complacent about this. I'm gonna leave it as like a solid B plus trading day. So that's it for today. If you're following me on Facebook, then please consider also checking out my YouTube channel. It's at yoon.tube. And if you're already here, then stay tuned for another episode from YouTube on my trading vlog tomorrow. Good night, everybody.